Greetings everyone, Jake Bernstein with the weekly Chimpcast for the week beginning Monday, the 14th of December. The time is 4:43 a.m. in Santa Cruz, California. Thanks for being here. On your screen you see the daily S&P chart with my moving average channel indicator, Williams accumulation distribution on the blue line on the bottom, and the red line, its moving average of 57 periods. We have one bar below the bottom of the channel with the market currently open. Therefore, we don't have a situation which we can say is bearish. It is not that much different than what we saw back here when we had one bar below the channel. It would take two complete consecutive bars below the bottom of the channel to indicate and Williams below its moving average to indicate a sell trigger. Remember, this market is now open, so this bar is not complete. It's just a few hours old. We need two complete consecutive bars and below the bottom of the channel and Williams below its moving average in order to trigger a sell. That has not happened yet. On a weekly basis, going to the weekly chart, just one moment please, we see again a drop down to support, no change in trend, and on a monthly basis, clearly a complete normal market in terms of support and resistance. So when you have statements such as that given by Carl Icahn on Friday that the high-yield bond market was a disaster area and that he had concerns about the junk bond market collapsing, of course it causes investors to be negative and to have concerns. This is normally the time of the year for prices to go higher, and we continue with that expectation. The pre-Christmas rally is very significant and very reliable, historically documented, well over 70% probability, so we continue to look for higher prices and consider this a buying opportunity. Naturally, if you don't want to catch the falling knife, we go back to our original strategy, which is wait until you get a buy trigger. Because we are in a period of seasonally bullish prices, one of the ways you can take advantage of this buy trigger is to move to intraday charts and take the next intraday buy trigger. In terms of intraday charts, we prefer the 45-minute, the 15-minute, or the 30-minute chart. 30-minute chart works well for most people in futures. Remember that there are a number of things developing right now that have a negative backdrop geopolitically, but we want to be buyers on drops to support, and we'll give you specific recommendations in the 2Chimps.com report. Thanks for being here, and again, best of trading. To remember, 'tis a season to be bullish. We believe that Christmas fare will be puree of bear.